Americans rush back to get into debt and borrow more money. Hey everybody, my name is JJ. You're watching Bolt Boom Bear Bust. It's July 18th, 2021. Really appreciate you joining me. Please do not forget to hit that like and subscribe button so you can continue to get all the latest videos and updates. We have several new reports coming out each week. Today, let's talk about debt and American spending habits. Americans have decided to go ahead and rush into debt here in 2021. And this is especially concerning because we did see the big pullback in spending in 2020. Of course, a lot of it was people couldn't spend even if they wanted to because so many businesses were shut down and so much travel was restricted. But you would have thought that such an economic devastating time would have possibly thrown caution to people, and maybe people would be putting back money instead of going out, taking on new debt, getting more loans, borrowing money, going out and spending, going on traveling, vacation trips, and a lot of luxurious spending and non-essential spending. But no, people have decided to rush back into debt. Let's take a look at a few articles today. Recent Bloomberg article, Americans' debt soars to 14.64 trillion in borrowing binge. And we predicted this would likely happen with the reopening. A lot of people were scared to go out and weren't able to go out in some cases because of the restrictions that we mentioned earlier. But people were afraid of the sickness. Now we're actually seeing some surge in cases in some areas. For example, Los Angeles here has new mandates being put in because of rising cases. But overall, things are reopening. Unfortunately, a lot of businesses, tens of thousands of small businesses, will never come back or reemerge from these shutdowns. Another recent article, Wall Street Journal, borrowing is back as signups for auto loans and credit cards hit records. And here's a nice picture here. Do you like my nails? I got them on an installment plan, only 3 easy payments of $39.95. All right, I was just kidding about that one, but people do go out and decide to make purchases on credit, even small purchases in some cases. I saw a commercial for some like pillows and sheets the other day, and instead of paying for it all at once, it was like 3 installments of $13. And I think businesses know that people like to buy things without actually paying for it in advance or paying for it at the time of purchase. Why? Because most people don't have that much extra cash to go ahead and spend. So it's installments, it's swipe the credit card, take on debt. Excerpt from this article, Americans are borrowing again in some cases at levels not seen in more than a decade. Consumer demand for auto loans and leases, general purpose credit cards, and personal loans were up 39% in April of this year compared to the same period last year, according to Equifax. Now that's compared to last year. Some of you may be saying, well, the economy was shutting down last year. Of course, it's going to be higher. But look, even compared to 2019, debt for this type of borrowing and spending was up 11%. So it's not just that it's compared to the shutdown. Americans are zooming back into spending, and most of it's for really non-essential items. This surge in spending and borrowing is not people prepping for economic hard times. It's people being over optimistic, in my opinion, that we're seeing this V-shaped recovery. Everything's amazing again. No problem. We'll just take out debt, travel, and spend money. No problem. Even the Fed has acknowledged this here. Recent article, consumers take on more debt in May. The Fed shows. ABCActionNews.com also had a recent report on this. Consumers' credit card balances will rise in 2021 following the debt decline in 2020. So you let me know, is this a good thing that Americans are ready to go out and take on debt to go ahead and travel again and party again? Well, listen to a quick report here out of this article about how one person got into $100,000 worth of debt. Take a listen.
For years, Jennifer Myers led the good life. It included trips to Vegas and the mountains.
And that's how we were paying for it, was every time was credit card.
Along with the purchases of designer handbags and expensive bikes.
If you want something, just get it.
Luxuries financed by a dozen different credit cards, some with interest rates above 20%.
Discover, Sam's Club, TJ Maxx.
And how much did it add up to?
It was 80, it was 100,000.
How did that make you feel?
I was in tears.
44% of Americans told us that they're willing to go into debt during the second half of this year for non-essential purchases.
Right now, you saw a lot of the luxury items, and this person talked about the trips to Vegas, and looks like they had a lot of fun spending money. Now, how does this make you feel if you're careful about your spending because you don't want to take on debt? But that also means you may not have as much fun as someone that's just willing to go out and spend endless amounts of money that they actually don't have. How does it make you feel? Please let me know, because I'm someone that's very reserved about spending money that we don't have to spend. Sure, I like to go out and do fun things every now and then, but most of the time it's not very expensive things. I don't go to Vegas very much. We went camping a few weeks ago, and that didn't cost much at all, and it was a lot of fun. But some people want to take, a lot of extravagant vacations, a lot of luxurious items. I've got some good friends of mine that actually filed bankruptcy here this year, and they're people that never look for bargains. They always just go out and buy their groceries at Costco. They never look at any discount grocery stores like Aldi or Grocery Outlet like we have here that I like to go to, and some very good prices on food items there. They rarely ever buy anything used. It's always new cars. And I'm someone going out looking for a car that's 3, 4, 5 years old. But yet I'm also doing less as far as spending and traveling, right? But I also may not have as much fun as far as taking vacations. So when you see people just going out and having fun taking vacations, it almost makes you want to do it also. I think a lot of this is keeping up with the Joneses type of thing, or keeping up with the neighbors, right? You see the new car parked in your neighbor's driveway, that makes you want to go out and get a new car. You see people spending, traveling, they're posting their fancy dinners on Facebook and their expensive trips on Facebook and social media, and it makes you want to do the same thing, right? To make it look like that you're just having the time of your life, or to make it look like you're very successful, when in the background, like that report showed, you're taking on, in some cases, hundreds of thousands of dollars worth of debt. Is it just because to have fun, or are you trying to impress people? I'm not sure what these people are thinking. Maybe because they know that bankruptcy is always there. They're willing to go out and spend. But think about what would happen if we had sound money. If banks weren't so willing to loan out money because they know the risk of it not being paid back. But here's the thing, when you're a bank, you know you're going to get bailed out in the end no matter how many loans you give out. So banks are not cautious about giving out loans. And think about how many jobs would vanish if it weren't for the endless bank support and endless debt, endless amounts of money created out of thin air. How many jobs would vanish if we went back to sound money? You see, when most spending is done based on people taking on debt, that creates jobs that are only going to remain if people continue to be enabled to take on more debt. So if there ever is a limit or an endpoint to the amount of debt that can be created, the amount of loans that can be given out, the amount of money that can be borrowed, then that's when you're going to see the economy really take a downturn. And the economy already, in my opinion, is really bad. Anytime you have to have this much debt just to make things look normal, just to bring back jobs, it's not a good sign. And the more people that go out and spend like this, then the more prices are going to rise. So even if you're very careful about your spending, you're still going to end up paying higher prices in the end because of all the other people spending money that they don't have, driving up prices, driving up demand, when goods and services are not really increasing to match the spending and the demand. So everyone gets hurt in the end. Everyone ends up paying higher prices. Even people sitting back right now watching their home equity go up, they are going to end up paying higher insurance, higher taxes. And if you have a mortgage, that's going to be rolled into your mortgage payment in most cases if your mortgage is impounded. All right, everybody. So the debt frenzy is back here in 2021. A lot of people willing to go out, take on new borrowing, loans, spending. And what's that going to mean? Rising prices. So continue to brace yourself, people. Thank you for watching this report. Everybody stay well, stay safe, keep stacking, stay prepared. Bye for now.